Hello and welcome to this full-part video series, The Self-Employed Debate in Conversation with Together. I'm Samantha Partington, a freelance journalist for Mortgage Solutions, and today I'm joined by Together's Maeve Ward, Head of Intermediary Sales, Personal Finance, and Nick Parker, Head of Networks and Clubs, and their guests, Paul Zammit, CEO of the Loans Engine, and Greg Cunnington, Head of Strategic Accounts, Legal and General. In our last series, we looked at some specific self-employed complexities and highlighted the lending opportunities. In part 3, we're getting inside the mindset of an underwriter to find out how they view a borrower's circumstances and how they weigh up the merits of a case when deciding whether or not to lend. So Maeve, I'd like to come to you for the first question. When faced with a self-employed lending opportunity that has its own unique set of challenges, how do specialist lenders underwrite that deal differently to the high streets?
I think it's probably fair to say initially that every lender has a set criteria and lending standards which outlines their risk appetite. I guess it's very different in the specialist space in the sense that whilst we use technology and there's a big place for technology to make lending decisions, it is not the only way in which we reach the decisions that we do. A lot of the specialist lending, and especially at Together, is about understanding each and every case on its individual merit, because on paper, two applications can actually look very similar, but when you actually delve into the detail, they're vastly different. So we spoke earlier a lot around presenting the case in the right light. And I would really echo that. The first thing that an underwriter will want to understand is, what is it this applicant is trying to do? What security am I taking? What does their credit profile look like? And if there are blips there, what's the story? And how does their affordability look now? And ultimately, how is their affordability going to look in the future? And then taking a step back, assessing all of that holistically, and then asking yourself, is what we are doing lending itself to a good customer outcome? It's the sort of show me, tell me, plausibility, sustainability. That is what an underwriter is generally going to look at.
Thanks, Maeve. Nick, I thought it'd be good just to build on that a little bit. What risks do specialist underwriters and credit risk teams focus on? So perhaps if you could give us a few examples of specific risks that they might be looking at, and how are they trying to mitigate those risks when they make a lending decision?
So principally, the main risk that specialist lender and any lender is looking at is the propensity to default. So the high street will calculate the propensity to default based on a number of stereotypical factors that feed into a credit scorecard. So they'll look at the profile of the person, the age demographic, the occupational sector that they're in, and they build up a picture that the computer will then sort of like calculate a propensity to default, or give them a credit score, and that's a bar that they will need to jump up or jump over in order to achieve a yes with the high street. Essentially, you remove that modeling within specialist lending, and you start to rely on the underwriter being the supercomputer, the risk manager, the person that's there to understand the story behind the numbers that they're seeing. But they're still principally looking at the same thing. What is the likelihood of this customer in the scenario that I'm seeing here? What is the propensity to default? But what they're not is they're not risk averse. What they are is risk managers. So with every risk that's presented to them within the story, they're looking for something to mitigate it. They're looking for something that gives them comfort, that, as Maeve referred to earlier on, is it sustainable? Is it plausible? And longer term, does this remain affordable? And the most important thing is by making this lending decision, am I putting this customer, this self-employed customer, in a better or worse position by doing so?
Paul, I thought it'd be good to get into perhaps some of the documentary evidence that underwriters are looking for that would give them surety and comfort that they would want to lend. Obviously, you deal with underwriters day in, day out. What kind of evidence do you know that they are looking for that is going to make them more comfortable with a case?
I think something we talked about previously is that if here at the Loans Engine, we don't offer, I know we sort of touched on us being a packager, but actually we're a master broker in the sense that we don't offer a package service. So the beauty for us is that, as the advisor would have done their due diligence up front in terms of the fact find. A lot of the clients or applications that we receive from brokers is a result of, not necessarily impaired credit, but a build up of credit that the high street or even some of the challenger banks are unable to sort of repackage to a degree onto something that provides a positive consumer outcome. So, the tools that we have available to us here from an advice perspective, I know we're talking about the questions around underwriting, but they go hand in hand. From an advice perspective, what my advisor has in front of them at any one time is, of course, your basic demographic details, coupled with a credit report, which tells us a huge story in itself. Of course, on face value, however, you might have a client that's come through with impaired credit, but it's understanding how they got to that situation. And understanding that, coupled with an income quirk, such as someone who is maybe self-employed. Again, we've talked previously around someone in the gig economy, someone who's a direct contractor, etc. Put those two together to understand the story is the key part of the evidence that an underwriter, a lender, would be wanting to know the answers to. And so if you've done your fact find up front to the best of your ability, posing that case to again, could be on a referral basis to an underwriter, there's really no, in my mind, there's no scenario that passing a case over together wouldn't get that positive outcome, because otherwise we wouldn't refer it in the first place, is sort of where I get to. But fundamentally, the attributes, as I said, clearly are, okay, does the story tie up? Where's the risk? Ultimately, from a lending decision, it's not will we get our money back, it's making sure, from what sort of Nick touched on, from a risk management perspective, if the borrower falls into financial difficulty, how can we work with them? So from my point of view, as I said, we would have had all of the case submitted as it should have been in the first instance, because if we, as I said, haven't understood the story, we wouldn't be passed it through in the first place.
Thanks, Paul. And Greg, I wondered if you could just help brokers with some tips. So what would your top tips be to brokers who are dealing with a self-employed case that is going to end up with a specialist lender, so it's been rejected by the high street, to get them thinking more like an underwriter so that they could deliver a better service to their clients?
Yeah, and I think that kind of backs up everything everybody's been saying in terms of thinking like an underwriter. I think that's a really important term. I always remember when I was head of lender relationships for a large London brokerage, Nick remembers who, we had a regional building society where one of their underwriters came in and worked one day a month in the office. And it wasn't to interact and take the case of advisors. It was just to kind of be there to build a relationship, but then see how they underwrote cases. And it was incredible, because what happened, there were so many parts where an advisor went, oh, I didn't realize you had to take that into consideration. Oh, wow, that's a lot of detail. But then obviously it was a small lender, but the application volumes with this lender went up by about 500%, because it meant there was just a complete understanding of what they would and wouldn't specialize in and look at. And so I think it's having that almost helicopter view as an advisor of what does the underwriter actually look like. And then remembering it will be different for every lender as well. There are so many options in this sector. I spent a couple of hours last year in the head office of the top 6 lender with their underwriting team. And I thought I'd see a lot of computer screens just going yes or no. And actually it was the complete opposite. There was lots of complexity, there was lots of detail, there was notes, but it was only in their niches. And intermediaries who understood that were doing some really good complex cases. And you've got to remember, this is times over 100 lenders for intermediaries. So it's a difficult job. There are lots of options out there. I can also get my plug in, but they could use a tool like Ignite to shortlist and make that as easy as possible and do some heavy lifting. But I think it's that point of think like an underwriter. And again, to be a bit repetitive to a point I made in one of our previous discussions, but it's doing that full detailed fact find. If it's a client who's going to go to a specialist lender, if you've only sat down with them or been on the phone with them for 20 minutes getting the information, I'd almost guarantee you've not got everything required and something else will come up. If there's a buy-to-let portfolio get all of the detail. If they've got 2 incomes, get all of the details on all of it. If they're a limited company director, make sure you've been on Companies House and done a sense check. You'd be absolutely amazed what you pick up with those sense checks. And remember, lenders do this. Again, that's part of thinking like an underwriter, even though it's not necessarily in your kind of induction course A to Z teaching of how to do the job.
And that's all we've got time for today. I'd like to thank my guests, Maeve, Nick, Paul, and Greg. We hope you can join us for the final part of our self-employed debate, when the panel will be sharing tips on how brokers can turn a no decision from the high street into a yes with the support of the specialist sector.